Good morning, guys. Back live. Hopefully the chart's going to work better today. They did yesterday. Finally. I'm going to go over the trades that I did have yesterday for those that you was in here. Had 2 Euro CAD trades that were losers. One was $8. It was the first one I took. And the second one was $11. That was a loser. Also took a CAD yen, half a position. That was a $4.50 loser. And Euro yen, full position, that was a $10 loser. So those came up to $33.50 loss. And those four trades that were all losers, $33.50. I had one winner that was a half a position, which was the Euro New Zealand. It went up 70 something pips from my buy position, and I took it off at 60, that's where I usually do. Now because I had a half position, I had to take off the whole thing, but that's for, like I said yesterday, Laughs and Gills will show you how this thing works. And that was a $30 winner. So I wound up having 5 trades, 4 of them losers, 1 winner, and only lost $3.50. That's how I trade in a nutshell. I look for low risk trades. I take off half a position, depending on which currency it is and the range, daily range for each currency and where it's at the time in the range, because it could be anywhere from 50 to 80 depending on which currency. But the Euro New Zealand was 60, so I took that one off. Now that would have just been, if I'd been a full position, that would have been half off at 60, would have been $30. I would have been holding it, but I would have got stopped out at break even on the second part. So I feel good just losing $3.50. I don't think that's going to hurt anybody. But you say, well, you had a lot of trades, and 75% were losers, or something like that. Like I said, the one winner wipes out all those. And if all of those wound up being winners, would have had a pretty good day. But it's woulda, shoulda, coulda. But that's why you watch it. That's why you get low risk trades. And see, this is one I was talking about yesterday, the pound Aussie that we had missed. It was already up into here. The buy signal showed up. The poke down on the 4 hour. This is 4 hour. That was your opportunity to get in long, and you're still in this trade because you took off half your position, so you don't have to look for another opportunity. You're in it already. And let's see, there was another one, I believe, wasn't there? Was it the pound CAD? I think it was the pound CAD. Now that's 1, 2, 3, 4, 5, 6, 7 hours. So this would have been during Europe session. Couldn't do to see how it's run away. There's nothing you can do about it. You just go and look for the next one, because now you have to wait for a drastic pullback, which could take all day. So there's nothing we can do on this one, unless you just happen to get in there. If you did get in this, you've taken off half position. Now you're moving your stop up. But I didn't get in that. The pound dollar 1 hour. Say if you didn't get into that, kind of went sideways, you had a chance there to get in, and there was your real opportunity to get in right there. And this was at, this is 1 hour, right? 1, 2, 3, 4, 5, 6. Again, that was during Europe session last night, 2 o'clock in the morning, 3 o'clock in the morning. So it ran away. By the time you get up, it's too late, you missed it. But if you did get that, this is what you look for. Pull back, go. And now you've got half your position, and you've moved your stop up to break even, which if you got in here then these were your stops. Now that it's run up, your break-even stop, you can actually put it under this one. That's what I do now. Move it up from here to here. That one's going to make a little money. If you want to continue moving the stop up, you can, but there could be a retracement on this thing first before it goes higher. But I don't think the pound dollar is going to start moving until probably the first of next week. I mean, a real move where to start a trend. The Aussie dollar 1 hour was in a buy. I think this was from yesterday. Yeah, but it was late yesterday, at 3 o'clock. 4 o'clock in the afternoon. The buy signal, if you didn't get that, you could have got that, and now you've taken off half of your position. Euro CAD, see, it's made a buy also. If you didn't get in there, you got to wait now. That's too far, too much risk. Need a pullback back down into here for a chance to get in long or a low risk trade. And I think the 4 hour on here is showing sales still. It was. Now it's made a 4 hour buy. Yeah, we need a pull back into here, and it could come on that. It ends in 48 minutes, that candle, so we're hoping it pull back into here where we can go along with it. So we have to keep an eye on that one. CAD yen, I was trying to sell it yesterday. There was your, what time is that? 2300, 68. So that was last night during Asia session. And this is, there was your opportunity right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So this would have been last night. Yep, during Asia session, you had a chance to get in after that showed up. There was your poke up. Let's see what your risk would have been. The high is 110, 86.7. The high of that candle is 85.9. 1 pip plus the spread risk. Mine's 3, about 3 on it, so that's 4 pips. Let's say you didn't get the best case scenario. You missed it a little bit. It was let's say your risk was $10, and you got in at 76, risking $10, and it went down to come on now, show me when it went down to. I know it's not 47.9. Or it could be, it's a 1 hour. Oh, what's the low? What's the low? Show me the low. Maybe it was 47.9. It seems like it's more than that. Yep, it was 47.9. So you haven't been able to get, you got 30 pips. That's not good enough. So now you got to hope that it comes up. Well, it could be another sell opportunity in here. But see, now this is your sell, not this. I mean your stop. When you got in there, that was your stop. Now that you got into this candle, now the high of this candle is your stop. So if it takes that out, it's taking that one out too. So if you wanted to put it at your entry at 76, you might have got hit. It had been very close, 75.6. Been very close to getting hit, stopped out. So that's why you got to keep it right there, your stop. Because if it does take that one out, it's taking that one out too. So that saved you at least 1 pip moving it. but because it didn't move the 50, well, and this would be 40 actually, but that was just a 30 pip move from where you got in, unless you got that high, which was 85. If you got lucky enough to get that, then you still didn't get enough. You didn't get the 40. There was 38 pips, so you're still in that trade. Now there might have been some that got in this that said, you know, hey, I'm taking 8-10 pips. Now if this thing turns to the downside and makes a lower low, they're going to regret that move, because that's all you get is 18. Okay, you got a Big Mac, great. Let's go for, you know, 6 or 7 Big Macs. How about that? That's on the CAD yen. The odd yen, yeah, it's still not making anything yet. Pound Aussie, the pound yen 1 hour. Remember yesterday I told you it was going up to there? Of course, this is overnight, so that changed. No, actually I told you it was going over here. Yeah, that's where it was yesterday. It was going up to in here, so it actually did hit that. Sold off. Now, this is a 1 hour. And then during Europe session, it took off. Now, couldn't have done. You got to wait for a retrace. Now, you could look for a sell opportunity if you wanted to. A pullback. Euro New Zealand has made a buy here on the 1 hour. That looks pretty good. Let's see, because now you can move your stop to right there. Actually, I might take this. Let me make sure where I'm at here. The low, if it'll show it to me real quick, 76.68. 76.68. And it's trading at 177. So that's 32. So that's beyond my parameters. But for laughs and giggles, and so you can be able to see this, I'm going to do a half a position long. Okay, I got 2. On 77.02 is the buy, and I'm going to go ahead and put the stop in, and that would be 176. What I say that low was 68.4. Okay. So that's 34 pip loss. That's 4 more than what I would normally do. Normally I wouldn't take that. I wouldn't take this trade because it's more than what I want to risk. And this would be a how much range have we done today? 1, 2, 3, 4, 5, 6. So it's been since that low. So we've already made a pretty significant move up from 76. So I may have to do 50 on this one as my first target. Now that would be only, since it's half a position, it's a $25 gain. And that's 34 pips, so it's a half a position, so I have a $17 loss if it's wrong. So we'll see. So we're in that one. Pound New Zealand 1 hour probably looks like the Euro New Zealand. No, that doesn't. It's in a buy from yesterday. And it's kind of just gone sideways. That one doesn't look good. I mean, there was your opportunities to get in. If you didn't get that one, which is kind of hard to do, you might have got in that. These were the better to get in. See, when it moves up and runs away, if you hadn't got in, if you missed that one and you missed that one and it runs away, you have to wait. So there's several hours in here. You come back and look at it later. And then when you say, okay, now it's poked down, even down into here you could have got in, even though it went a little bit lower, but you still made money on the trade. Because, let's say you got in on the low of this one. If this is correct, 204.11 plus the spread. No, that's 31. 204. No, that's 204.11 plus the spread. 7. 204.18. And it's been up to 205.14, so that's almost 100 pips. So you've definitely taken off your 60 because of the range on pound New Zealand's bigger than euro New Zealand. So you'd have got 60 on that, and now you're in the second half of the position. Now, because this went lower, you don't want to move your stop down there. You got in on this candle, because originally when you got in on this poke down, that was your stop. Now you've moved it to this where you got in on your entry, so the second half of the position will not lose money. Now if this push candle pushes up, then you probably want to move it under the low of this candle. Well, now that one will also make money, and you just hope it continues higher, but this looks like it's going sideways. New Zealand yen, 4 hour is making a 4 hour candle, but that doesn't end for another 40 minutes. Nothing to do there. We'll look at the 1 hour and see what it says. 1 hour has made a sell, so if you wanted to get in there, that's your stop right there. Where's this trading at right now? We could be able to experiment here. I don't mind doing it in half sizes, because I mean, if I lose $4 or $5 for training purposes, hey, it's worth it to me. I'm not going to suffer because I lose $4 or $5. New Zealand yen. It's trading at 87. The high of that candle is 04, so that's 15. Let's do a half a position on it. Short. Okay, we're in at 88, a little over 88. And what I say that high was? Oh, basically 05. So that is 12, 5, 17, $8.50 risk. That's all I'm risking, $8.50. Now this is a half a size, not a full size. It's basically for training here, on here, so people can learn. But I think if you're on here enough, you're going to figure out how I do this. It's pretty easy. So we'll put the stop in right now. That was 89, wasn't it? 89.05. Okay, so we got that in. So now we'll take that up. I got those. That was the New Zealand yen. $8.50 risk short on it. And then the euro New Zealand also was a half a size. And it was a $4.50 risk. So right now the most I can lose is $13. That's it. So I'm pretty comfortable with that. We'll let them play out and see what they do. Again, this is, you don't have to take these trades. This is for educational purposes only, which is what you're supposed to say. So everyone must trade at their own risk tolerance, which everybody has one. And it's different most of the time. So like I said, there's a lot of people that like to do the, when it starts moving, they get excited and they go, oh gosh, there's 8 pips. Oh, there's 10 pips. Oh, I need to take it. Get me $10. I got to make money today. And then they get out of it, or they get in it, and then they move their stop too tight. once they take half of it off, or whatever they're going to take off, and then it's they get stopped out, because then he can easily retrace that 8-10 pips easily, and then continue in the right direction. They like here, if you was in a buy here and you got in and you got your little 8 to 10 pips, and then you had your stop moved to even break even, they could come down to here. It's going to take you out, and it could turn right back around and head up. So that's what makes the world go around. Everybody trades differently, but I'm a low risk trader, low risk. And I do swing trading. I'm not doing 1 minute, 3 minute, 5 minute. I don't even use 15 minute. So I have 1 hour and 4 hours what I use. So let's see. That was the New Zealand yen, correct? Euro yen, which is I was in yesterday. Now see, that made a move up, but again, it's during Europe. See how it took off? Nothing you can do about it. Nothing. You have to wait for a pullback, somewhere back down in here to get in, to have the low risk trade. If it keeps moving up, you can't look at it. There's no need to even look at it the rest of the day. It's going to take all day long for it to come back, and we'd have to look at it at the end, toward the end of the day. Euro Aussie 4 hour. That's gone up, come down. Wow, that's come down a lot. That's usually not good when it does it that many times, but it's not taking out that low. So if you was in it and you did get in there, you may have got half your position off if you got in there and it got that moved up. But you're sweating it now because you moved, you got in there, your stop was there. When that move up, you got your stop right here, and you may have got stopped out right there. So it's very close. Let's see on the 1 hour. That might show a little bit better picture. Let's see, now it's got so it did. So that was over here. So that did go lower. Not by much, but it did. So now it's in a buy on the 1 hour. If you didn't get on that, and if you got a little pullback down in here, which that might be it before it turns up. But according to the 4 hour, it doesn't look very good. That'd be one I think I would stay away from, because the ones I've been showing you, as you can see, when you get a poke down, usually there's another one, but there's usually not 4 or 5 or even 6. So if it seems like they're trying to hold that, but if it takes it out, it's going much lower. So that one doesn't look too good to me. It has see, 8:30. I think there's news today, if I'm not mistaken, at 8:30. Y'all mind if I go get a refresh on my coffee real quick? I don't think we're going to miss anything in that short time. Okay, I'm back. Yep, I don't think we missed anything, I don't believe. Alright, so it's time for the news to come out. Now we'll look at the Aussie dollar because that's what's going to be affected most, and it's trying to run up, so it must have been bad news for the dollar. Yep, I'm glad the charts are working good today. It's the second day of live streaming. Oh, it feels good to be doing it. I'm trying to decide if I'm going to live stream tomorrow, Friday, because I usually don't trade on Fridays. Friday is just my monitoring day on my trades. Because for those of you that don't know, the big boys do not trade on Friday. He said, how do I know that? I said, just all you got to do is check the volume on everything. The futures, the options, and the stocks. You'll see there's half the movement that there is in Monday through Thursday. So that tells you they're not there. They're gone to the Hamptons, or they're living in Florida. They've gone down to there for the weekend, flew down there probably. They got the money to take a red eye down there real quick. So if they're not there, we don't need to be there, because they just let the average Joe, which is me and you, trade away. And that's usually Fridays is stop running day for the market makers. So they kind of whipsaw it and wind up stopping you out of your position because they know where they are. The only way they don't know where they are is if you don't put the stop in. But I put my stop in because I know where it is, because if they're going to run it down there anyway, and my trade's going to be wrong, it's going to take out my stop loss and where I wanted to be long or short anyway. So, and that trend will continue on that. But sometimes, like, see, this has been in a downtrend, this Australian dollar, a longer term downtrend. Let's see, let me switch it to 4 hours so you can see a bigger picture. Because even though the 1 hour's turn around, we'll try this out. Okay, what are you doing? That's still the 1 hour chart, isn't it? Yep. Come on, switch to the 4. Okay, there's the 4 hour. Yeah, it's been in a downtrend. See, it ran up some. Here we got another run up there, run up there. So we could fail up in here. It could push up a little bit higher and then fail and come back down. But there's no trades. If I missed that one, there's no trade for me on the 4 hour. No opportunity to get in. Got to wait for a pullback down into here. So there's nothing really to do on that. Let's switch on the 1 hour and see if we may have had a better opportunity. 4 hour, there is none. The 1 hour, if you didn't get on that one, you might have could have got that one. But let's see what the low is, because that might be pretty close to my 30 pip range using. Come on now, show me the low. I don't know why this one's doing that. Show me the low. Oh well. See, it's still moving up. Aussie dollars. I'll see what that low is. Usually my little pop-up box comes up. Why is that not coming up now? Oh, okay, that's 63.44. Yep, now it comes up. Thank you. So that was 63.44, that low. And that low is 63.31. So that's 13 pips. Yeah, that's within my parameters. So if it did pull down in there, could have got in. But that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 13, 14 hours ago. So that was oh, it was during, well, it was late in the day though. It was actually during the Australian session that turned around. So must not have been looking at it then. I thought that it was. No, I looked at it at 3 and 4 o'clock. That's what it was. That's how I missed it. Because by then it was down over here. I actually did poke down. There's your half. You're taking off half your position. You have now moved your stop up. If you got in that position. And hopefully you did. Hopefully somebody did. I didn't. I missed that. You're not going to catch them all. Let's see. Let's see, New Zealand yen 1 hour. We'll look at that, see how it's doing, even though it hadn't had much time to do anything. It's coming down some. And then the Euro New Zealand was the other, correct? And it's moving up. Okay, so where's that trading at now? Oops. Yeah, it's still got a ways to go. The Euro New Zealand, I'm up 20, a little over 20 pips right now. You say, why don't you take it off? Well, I know from experience. I print my charts off every day. Every day. It's a tax write-off. So you say, well, it's expensive. Yep, it is expensive. And the paper is a little bit expensive too, but I buy the whole box. So it's a little bit cheaper. Plus, with Office Depot, I'm a rewards member, so I get a pretty good discount. I get points, and I've even gotten them free before, the paper and the ink, after building up points. But it's a tax write-off because I'm a business. Trading is my business. So that's why I print those off, and then I mark them up at the end of the day. And why I got in the trade, why I got out of the trade, why I took a half a position, which I know why I take that, but that's just for trading purposes mostly. Sorry about that. Dog kind of kept us up last night. I guess we didn't run her and play her enough yesterday, so she was wanting to get up at 5 o'clock this morning and play. Well, go out to potty first and then play. So we tried to get her to sleep a little bit longer, and we got an extra 45 minutes out of her, and then that was it. She was ready to go. But that was doing pretty good. Euro New Zealand, if it could keep pushing up, that'd be great. Because like I said, the range on this, I'm going to have to move it down to 50 probably, because it's already made, that's from last night, so that's in the daily range. It's already made a pretty good move up for the total daily range. So I'm up a little over 20 pips. So that's a pretty good move, because if this thing, I hope it lets me tell what the low was. I should know that because I got in it. Was it 176.88? Okay, 170. No, that's not right. $176.59. 176.59 up to 20. So it's already about almost 70 pips for the day. It's got about 100 and anywhere from 100 to 120 daily range. So it's at 70 now. So I actually may have to take this at 40, just because of the big move up already. And unfortunately, this is just a half a position, so I have to take that half a position off. If there's a full position, I'd be okay with it. Then I could use the other half to hopefully make more money. That's pushing on up now. New Zealand yen, it's not really going nowhere. It doesn't have a great range. So it's more of a 40, 1, 2. Sometimes I get 50 depending on where the move started at overnight, for the daily range on it. Okay, yeah, that's not moving too much. Now, the one thing I do need to tell y'all, if you don't know, is the Japanese are probably going to step in here because their yen is getting way too weak. It's weak already because they have a 0 interest rate, but it's approaching the 150, and they're going to step in here and drive that sucker down probably anywhere from 400 to 700 pips. We just don't know when that's going to happen, but it's coming, because right now I don't really trade that, just because it used to be the range on it is not very long on the dollar yen, but it has made big moves up. Let's see what that went up to overnight. I'm pretty sure it's close to 150. High 149.71. So it hasn't got to 150 yet, but it could today if this thing turn around. The dollar gets strong again, it's going to head up to that 150. So keep that in mind. If you're long in the dollar yen, be very, very careful, because even if you have a stop in place, that's what you might say. I don't know if any of you remember 9/11. People did have stop in place, but because there was nobody, there has to be a buyer and a seller at that position. Somebody's willing to, if you're willing to get out of it, there has to be somebody on the opposite side of the trade. 9/11, there wasn't. All stops were not hit. It blew right through them. So remember, it can do that. There has to be, and with the Japanese yen stepping in, that can happen. Your stop won't be any good. Because nobody's going to step in to buy it. Especially if you have a tight stop, it's blowing right through that thing. So I'd rather be short the dollar yen than long the dollar yen. Now, for those of you who also don't know, that the whenever you carry a position overnight, like if you're long the dollar yen, you get interest on carrying that trade overnight. Depending on how much you have in the trade, it would depend on how much you get. Now, if you're on the opposite side, if you're selling the dollar and you're buying the yen, expecting it to go down, then now when you hold it overnight, they're going to charge you interest. It's not a lot. It's not a lot. It's not even enough to mess with, but if you're right, then it doesn't matter. You're going to make that back anyhow. But if you're wrong and it continues higher, like what it has been doing for the last year or 2 years basically, well, hopefully you're still not holding the position, but if you've been in and out, you've been trying to short it, then you're losing on the trade and you're losing on the interest. So, and that's on everything. That's on every currency. If you're holding the euro against the yen, if you're long the euro, short the yen, then you get interest added to your account, because the euro has a higher interest rate than the yen, and that's what you go by, the higher interest rate. So if your New Zealand is pretty high, got a pretty high interest rate. So if you're buying the New Zealand and you're selling the yen, you're going to get paid overnight. If you're selling the New Zealand and buying the yen, you're going to get charged interest. But you can't let that deter your trades, because it's not enough to really even worry about. It's just something for FYI to remember. So, where are we at on here? Moving on up on the Euro New Zealand. Yeah, because of the range, I'm going to have to take it off at 40. I hate that. But it is what it is, because I didn't get in where I wanted to. I mean, it's still a low risk trade, don't get me wrong. So we got that's not right, I know that. I've been up to 37, I think, or 38. If this is going to help me here. 34.4. So I had 22 pips, should say 22 pips. No, that's not right. 32 pips. 32 pips I had. But I'm looking for 40, so it's got to make another push up higher. So let's see. That low is 76, 68, and I got in at 2. See, I missed. That's where I needed to be in. It was at 68, but this is training purposes, for education. What you got to say. So that is my stop, and I got in at 177.02. So that's a 34, but it's a half a position, so it's a 17 $17.50 loss. Because 34 is more. What I use is 30. That's the max that I want to use. But because it was so close, and now where I know where I can move my stop, I mean, that's where it is. I don't have to have it there. I have it below this candle. So that's where my stop is. So I have to wait on it. So there's nothing to do just yet. New Zealand yen, my other trade's coming down. That'll be a 40 pip if it goes down, but it's a slow mover. It has moved some, but it's a slow mover, and the range on it is nowhere near as great as what the Euro New Zealand is. So you have to take all this stuff into consideration. You just can't throw a dart at the board and hope for the best. When I look at the pound Aussie 4 hour, I didn't get in that because I missed it, because it didn't do what I needed it to do. Well, I missed that. See, there's where you got in. Now it's too far away. I can't get in. So for those of you who got in, when they seen that candle, and either that one or that one when it came down, and it's moved up, you've been able to move your stop up from there to here, and if this continues a higher push up, now you can move it to there. So that second half will make money. You've already took off half the position, if that's what you want to do. Just because they say half a position, it doesn't mean you have to take it off at half. You can take it off wherever you feel comfortable with, whether it's an eighth, a fourth, or a third, or a number of pips. You'd rather take it off at 20 or 15. Whatever you're comfortable with, that's what matters. But I just know from experience, from printing off these charts and then looking at these so much since 2007, 16 years of looking at charts, and where I've wrote all this stuff down, that's what showed me on the different currencies. I can take 40 to 80, half my position off. But I have to look at the daily range where it's already been for the day at the time. Now if it's in the Asia session, it's different. You know what the daily range is if these candles showed up like that. Say for instance it was this was during Asia session. and then during Asia session still it came down, and this had been the range so far, then I can stretch it out, because now I know the pound, like for the pound Aussie, it's got 110 range for the day. So I know, because that's not that amount, that I can move it up to 60, 70, maybe even 80 to take off half of a position, and then just look to be moving my stops up. But you don't want it too much, because this thing can rotate. See, that's a pretty good retracement right there. So you have to remember that. You have to take into account all this. Ahmed asking, where are we in the wave count? I don't do wave counts. Sorry, Elliott wave, I know what you're talking about. Yep, don't do those. I had a gentleman who used to live in my neighborhood who was a, well, he'd been working all his life. He actually had a construction company. And turned the business over to his son. And he retired. Him and his wife both retired, because she done like the books and accounting and all that stuff for the company. And they both retired, and he had a lot of time on his hands, and he started learning how to trade, and that's what he first got into, was doing the Elliott wave. Well, if you've been in that long enough, and you can go and see for yourself that it doesn't always do that. It's like trend breaks. See, I don't do that either. Learned a long time ago, that's just a flip of a coin. It's either going to break it or I ain't going to break it. So in trend, those trend lines can be drawn. You can have 10 people, and it's going to be drawn 10 different ways. So there's not really a method to the madness in there. So I don't have to worry about doing that. I mean, this is pretty easy to me, the way that I trade. Because all I do is look for mine. Now this arrow here is what I trade. And these are ones I created. These I didn't create. Well, I did adjust these. But all these are, you can find these anywhere. These arrows, that's for a downtrend. That's for an uptrend. Now this is blue and arrow. It's not green. I don't have green and red because I got red candles in here, so it would just blend in. And when I got green candles, I don't want a green arrow because it just blends in. So the blue and the orange stand out, as you can see. But you can get these trend following arrows. Just now, this is MT4 I'm using. I'm not using TradingView. Let's see. And the green, I went over this yesterday. This is, you can get this anywhere. All it is a EMA, moving average 21. That's all it is. You can get that anywhere. These are parabolic SARs. You can get that anywhere. Yeah, that's what I'm doing right now. That green is a 21 EMA, moving average. You can get that anywhere. Put that on there. These are parabolic SAR dots. You can get these anywhere. Now I'm on MT4, so if you're on TradingView, it might look a little bit different. Might not be quite the same. Plus the broker too, whoever you use. I use a Wanda, so all the brokers are just a little bit different, not a whole lot. And then these lines here are DeMarker pivots. Now these are MT4 based, they're not TradingView based, so they may not look exactly the same. I have adjusted the settings on the DeMarker, because when I first put them on, they weren't never touching, and they should touch, which they do now. So I've been able to adjust that. So I have changed the settings on those. But like I said, TradingViews, I looked at them one time, and theirs weren't close to what mine was. So I'm not sure Maybe whoever wrote that script, made slight adjustments to them as well. So who knows? I mean, you wouldn't have any clue of doing that unless you could contact the guy that wrote the script. Now these are my arrows I created. I don't know anything about that Java code stuff, but a friend of mine does, because he works in that field. And so I asked him if I would show him what I'm looking for, if he could write the code for it, and he did. He had to go back and forth a little bit to have it adjusted where I wanted it, but now I've got it where I want it, and it works perfectly. Now these will change. These will go away, because if it takes out the low, like if it was right here, which it may have been, or it may have been up here, and when it takes out that low, it's going to go lower. So there's no reason to hang around for another $100 loss. So yeah, because if you say, well, why don't you have them repaint where it shows where the other arrows was? You know how many arrows I would have on here? There'd be, I don't think there was one there, but I believe there was one here, and then there was another one that was up here. So you'd have a ton of arrows. It would just clutter the charts up. So when I get in it and it takes it out, I know it. Then I have to wait. See, this is a 4-hour candle, so if it takes out that candle and goes lower, even though I'm not in this trade, if I was and it went lower, then I have to wait at least 4 hours for another candle to show up, and it's going to go much lower. See, like here, when it took that low out where the arrow was, see, it went much lower. So there's another 8 hours right there, those two candles. So if I mean, even though there wasn't one that showed up there, let's say for instance it did show up there, then I had to wait 8 hours to be able to possibly take another trade. So that's how this works. I look for a low risk trade. It has to be 30 pips or less. I won't take it any higher. And let me show you one that ran away. This is the pound yen. Now say for instance, well, let's see, if the arrow showed up here, which you see it hasn't, if it did show up there, if you didn't get in there, which you'd been lucky to, I mean, it has been a shot in the dark to get that, but if you didn't get that one or that one, you didn't have a chance to get in until it retraced there. But that would have been more than the 30 pips allowed for me to get in. And I think there was another one like this. Was it euro yen? Looked at it earlier. Yeah, see, there's no opportunity to get in. You'd have been lucky to get that. But it's just run away. Nothing you can do. Now you have to wait for a pullback. Should come back down if it does pull back. But see, the euro's strong today, as you can tell from the euro session. So they may just pull this back a little bit and it continues higher. So it may not come down here today. But if it does, we'll look at it, because that's where our stop's going if we want to get in. Because it's got to be 30 pips or less, because that way you have a $30 risk. Gann said you need 10 years to be a profitable trader. Do I agree with that? Well, for me, he's probably close to being right. I started trading in 1998. I didn't become profitable until 2006. So that's 8 years. Actually, a little over 8 years. So he's pretty close to being right. A lot of traders don't make it that long. I don't know if you know this, but 95% of people who trade lose money. And of those 95%, 68% blow their accounts. So that doesn't leave very many traders left. I mean, because if you've put in, $3,000, $4,000, $5,000, even more, I hope not, because I don't do that. My Wanda account, I don't have $10,000 account in there. Even though Wanda has been around since 1992, so they've been here for 31 years. I don't see them going anywhere. Like Interactive Brokers, they've been around even longer. I don't see them going anywhere. But these fly-by-night ones and ones that open up, I would not have a lot of money in them accounts. Because if they go bankrupt, guess what? You don't get no money back. They're going to provide it to the shareholders first, and what's left over gets divided between you and everybody else that had accounts, and it's going to be nowhere near the $10,000 you had, nowhere near it. So I want somebody who's been around for a long time. Now that, like all brokers, they all trade against you, because they know that 95% of people who trade are going to lose money. So that's why they trade against you. But they don't go overboard with it. Like these companies that have been around for a long time, they don't go overboard with it. But these other fly-by-night companies do. So I hope that explained that well. That's just for future generations to be able to learn. As I've had, I took my certification a long time ago because I thought I kind of wanted to be an analyst, to be able to do this after I seen that I enjoyed trading. But the more I delved into it, the more I found out how immoral and illegal a bunch of that stuff is. And I'm the kind of person that I don't treat people that way. So I wouldn't have been able to sleep with myself at nighttime, knowing that how they do. So that dream kind of went by the wayside. So I'm happy where I'm at now, trading for myself. I used to trade for when I worked for Time Warner, which is now Spectrum. I used to trade people's accounts, their 401k accounts, for them. And especially after 9/11 happened, because most people we actually have one guy that worked for Time Warner who had been there before it was Time Warner, which is now Spectrum. So he was there a long time, and his wife was a school teacher, and even back then she made pretty good money, and she had a pension as well. And then he had a pension, he had a pension as well with Time Warner. But he was fully vested in his 401k, and he had over $1 million with his Time Warner stock and his 401k. And they had 3 daughters. 2 of them had graduated. They had paid for college for the first 2, and the third one was a senior in high school. And then when 9/11 hit, Time Warner stock, I think at the time, was 129, I believe, close to 130, and it went down to $3. And he's still working for Spectrum now. Their dream got vanished, and I had tried to tell him to pull money out of it, because I was actually looking at charts then. Because I went to work for them in 1998, I think it was October of 1998, so it's pretty close to 99. And I was looking at charts then, because I started learning in 97 from my father-in-law. And so I kind of seen the charts turning, kind of like what they're doing now. I mean, because if you look at the futures every day, here since after Labor Day, any big move-ups have been knocked down. And that's what happened when 9/11 was taking place, right before it. And then 9/11 pushed it off the cliff. And a lot of people's hopes and dreams were wiped out, because everything was tied into either their 401k or their pension or stocks that they had, or even options that they had on stocks. And I know a guy that had like gold futures, and he was short. It wasn't long, because gold exploded to the upside when 9/11 happened. And he had a major margin call when he woke up. And I think it was like $30-something thousand, and he had to get a second mortgage on his house to be able to cover that. And so that's helped me. But other people's bad experiences have helped me learn what not to do. Don't get greedy, number one. Don't get greedy. You just want a piece of the pie is all you want. Now every day, like, you know, I'm a swing trader. I don't get in a trade every day. As a matter of fact, I got to look at my two trades I got in earlier, and if you look back at the video, you'll be able to see one was a Euro New Zealand, the other was New Zealand yen, and New Zealand yen I'm up eight pips. I think it was 15 at one time, but it's a half a position. The only reason I do half a position, I normally do full positions, but it's just kind of for be able to show people how I trade. And you don't have to trade this way. It's not for everybody, and that's what makes the world go round. Like I said, these, let me see, my Euro New Zealand. Number one, I probably wouldn't have taken it normally, but since it's for training, and I got people on here, I wanted to show, you know, this was the buy. This is a 1 hour, so this is from Europe session last night. Where the buy signal showed up. Now, you probably didn't get that, but this is where you should have got in. And then you had this run up here. See, 68's that low of that candle, and then the high of this candle was 150. No, that's not right. Euro New Zealand's in 170s. Come on. I think that was in the 60s. Yeah, 177.34 was the high of that candle. So you were in at 68, so that's 32 plus 34. So that's almost 70. So I'd have been out at 60 if I'd have got in at that low. But I wasn't in here when it hit that low. So I would have already took off half a position at 60. And I don't know if he was in here before, but the reason I do 60, all of them is different. Euro New Zealand has a daily range of 100 to 120 every day. Sometimes it can be a little bit more depending on if there's news for that country, either Euro or Europe or New Zealand, and it can push it up, you know, higher or lower. But because of the daily ranges made, this was during Europe, it already made a lot of its daily range. I had to cut that down to 40, and of course it's not gone 40 yet, because I got in at 177.02 and it's gone 34, so I got 30 pips. And you might say, well, why didn't you just take the 30? Well, that goes against my trading, because I print all these charts off at the end of the day. And I've had people say, that's crazy, that's a lot of money in ink and in paper. I said, but if this is a business, it's a tax write-off. And there's a company that I use here in the U.S. Where I get reward points for buying ink and paper and other products I use in my trading. And so it's able to, there's been times where I've got free ink, I've got free paper, free staples, folders, all kinds of stuff for having enough points. But it's a tax write-off for all that. But I write at the end of the day when I print these off, if I got in a trade, I write down why I got in the trade and where my stop was going to be and the first profit target, because I take off half. That's just me. That's from experience. I know to be able to take off half. But other people, whatever you're comfortable with, it don't have to be half. You can take off an eighth, a third, a quarter, whatever you feel comfortable with. But then you just have to protect the rest of that, your position, once that first is taken off. Oh yeah, I do move stops. See, like for instance, you know, I'm in this trade, but not in where I wanted to be at. But I just done it for training purposes only. It's only a half a position, so if I'm wrong, the most I can lose is $17. I mean, that's not much. That's a dinner for me and my wife at McDonald's. So it's not that big a deal. But let's say, for instance, that when this candle showed up, you might not have got that right there. Chances are you didn't. So you're waiting on a retracement. So you might have even got on in toward the low of that candle, toward the low of that candle. So if you did, this is where your stop is. If you got in any of these candles, and even that candle, if you happen to get in there, that's the low of that candle is the stop. You don't have to put it below it. You put it wherever the number is, the low. That's it. And then as it moves up, like that poke up right there, if you did get in, now you move your stop from there to here. So now you're at break even on your trade. So now you don't care what it does. You hope that it goes up if you bought it. You hope that it continues going up in here. So that way you can get to where you can take your first half of position off, or whatever you feel comfortable with, taking off that first part, and then moving your stop up so that, like, if this pushes on up here, then you want to move your stop under that candle. Now that second half is going to make money no matter what happens. Your second half, you've already made your first half. The second half is going to make money no matter what. And you don't have to look for another trade. Because I don't know if you have how much research you do on YouTube, but there's a lot of traders that live stream that do 1 minute, 3 minute, and 5 minute charts, because they want to have 100 trades a day. So they're constantly having to figure out where to get in and where to get out. And that one trade that they may have made might work, but because they've had to put their stops so tight and the ranges on these things, the stop could get hit, but then it continues in their direction. With mine, I have to wait, but my target profit is further out. So the chances are, if I've taken it at 60 on the first profit target, that it's not going to retrace 60. Because if it does, then it's wrong, and then it's going to take out that low right there. But if it's continuing the trend up, then that's not going to do a 60 pip reversal. I do put a hard stop in, and the only reason I do that, because I know brokers see your stops, and then they can show it to other brokers if they're in working with them, and be able to show them where the stops are for their clients. So I put in a hard stop only because I know that if it takes that where I'm getting in at, if it takes that out, it's going lower anyway. Like, say for instance, if there was an arrow, a buy arrow right here, which there probably was, the distance from there to here, a buy arrow, you made your move up there, that made the poke down. So if you didn't get in somewhere in there, there's where you got in, there's where you made your money. And if it comes back down to there, you see what happens. It'll blow right through it, make a little bit of retracement to take out stops, and then it blows lower. So there's no reason to hang on right here, unless you got in really low with a really low risk, and the end of the daily range was, say, down in here, and then it turned around. Then you could actually add to the position. But when it drives down to here, yeah, you don't want to add to the position, because that's a huge drop right there. That's a big loss, couple $100 loss that you're having to hang on to and wait and hope that it's going to turn around. As opposed to here, like I said, I've got a half a position, and it's a $17 loss. That's the most I can lose on that trade, $17. And I don't know about you, but I can survive that. And if you put a stop in, the only problem with that is not putting the stop in, is that if it does take that low out right there, see, I'll have my number at that low. That's where the stop's going to be. And if it's going to take that out and go lower, which I'm glad it's pushing up here again now, if it takes that stop and goes lower, now you're going to lose more, because now you're having to go back and say, okay, I'm going to use a visual stop, what I call a visual stop. When it takes that out, now I'm going to get out. But because of the spread, now you're going to lose more money. Whatever the spread was. And on your Euro New Zealand, on mine is anywhere from 4 to 6 pips. So that's an extra $4 to $6. And that's if you having to get it out right then. I mean, it could be a slippage and you lose another $1 or $2. That way I save money by just having it there. Because if If it takes it out, it's wrong anyway. As I just showed you, it's going lower if it takes that out. So if you left your stop there, but even there, when this happened and you were down in here or in here and it moves up, now you've moved your stop, and your stop should have been like either that candle low or that candle low. And you see what happens. Even if you had it right there, it took it out, came back up to it, and drove back down further. There was no reason to hang on, none at all. I've printed off these enough, and that's what I would advise you. At the end of the day, is print the chart off. If you got in a trade, write down why you got in the trade, where your stop is, which you can mark it up on there, and then where your first target profit is going to be at for, whatever you take off, half, a third, a fourth, whatever it's going to be at. Put that in there. And then go back and look. The next day you'll be able to see it either went higher or went lower. It's going to do one of the two, or hopefully not sideways, as long as it's still going in your position. But then if it's a couple of days later it takes that out, then you can see that's why you wanted your stop right there. But I've watched some of these guys on YouTube. I go small. My account excuse me, on a Wanda is I have a $1,000 account. That's what I keep in it. Now if it goes below $1,000, you got to put, say it drops below 950 at the end of the day, I have to add another 50 in it. But when I get up to 1,500, I have them take out 400, and they send it directly to my checking account. And I have it set up where they do it automatically. I don't even have to call them or do anything. It's set up automatically with a Wanda. And that way I've still got $1,100 in there, and then I can continue trading in it. The limit, I think, for a Wanda, it used to be $50 to open an account, but that was back in the 90s. And I think now it's $250 if I'm not mistaken. But you don't have to use a Wanda. I just like them. I've used them since 1998, and I've not ever had an issue with them. Accumulate positions? No, I don't. Like I said, if it does, it depends on the range. Let me try to find one if I can where I can kind of show you what I'm talking about. New Zealand yen. I see, like in here on the New Zealand yen, because the range on those are anywhere from 50 to 70 pips a day. That's the daily range for the New Zealand yen. And so say for instance it'd come in, this is in the middle of the day, a candle showed up in here, you happen to get in there, or you happen to get in this poke down, then you got half of your position off. And then I knew that this next day come in for a daily range. No, I don't accumulate. In your $1,000 account, you take profits automatically. No, I take off whatever position I'm in. Depending on the currency, because the daily ranges are all different, I take off half of my position. Like for the Euro New Zealand, it would normally be 60 pips, starting at 60 pips. I take half off. New Zealand yen would be about 40 pips. Take half off. Just depends on the currency. Now as soon as I do the trade, that's what I put it in. My first target profit off, I take half position, I set it at 60 or 40 depending on which currency it is, and the daily range. Because if the New Zealand yen's already done a say 60 pip range when I first get in here in the mornings, yeah, I can't look for a trade for that, because it's already done its daily range. So I have to look at something else, and there's plenty to look at. Just because you miss one doesn't mean there's another one coming up. Let's see, I need to... New Zealand yen's trying to pull down. I don't think I've got... it's back to where it was a little while ago. So I'm up about $15 on that one. New Zealand yen. Pound New Zealand not going anywhere. See, here's another example on the 1 hour. There's your buy. That's from yesterday. You probably didn't get in that trade. Couldn't get that low. But you might have got in on that trade. And you might have got on this trade. So you made money on either that one or even that one. And now you're moving your stop up. Like, see, if you did get in down in here and this continues higher, then you're going to want to bring your stop up to the low of that candle. And so you've already took off half of your position, or whatever you feel comfortable with, on the first profit target. And then if you did get in there, the other part of your position makes money no matter what. No matter what, it's going to make money. And I don't have to look for another trade. I don't have to look for another trade. I'm still in that trade, and hopefully it's going to continue higher or lower depending on the position you're in. And I'm not sure you were in here. Like I said, you can go back and look at the video at the end of the day, because I posted. I'm recording it right now. The blue arrow and the orange arrow you can get anywhere. All they are is trend following arrows, which I've adjusted a little bit. But yeah, you can find those anywhere. And yeah, New Zealand doesn't move like the New Zealand yen and the New Zealand dollar move about 60 to 70 pips a day. That's their whole daily range. So it is kind of hard to trade them. But I said earlier, I don't think that you were here, that I don't know if you know this, but if you carry it overnight, you're charged an interest, or you gain interest, depending on what currency. Like, say, for an example, you were long the New Zealand yen. So you're buying the New Zealand and you're selling the yen. Whether the yen has 0 interest rate. The New Zealand has a 5.5%, I believe, if I'm not mistaken. It could be 5. So because you're long and that you're carrying it overnight, they will actually pay you interest. Now, it's not very much. It's not enough to even start trading it that way. But it just so happens. But now vice versa. Let's say you do the exact opposite. You're selling the New Zealand and you're buying the yen. So you gain 0 interest because the yen's at 0. And because you're selling the yen, now they take interest out on you every day. It's every day. It's not every week. It's every day. Monday through Saturday. Because if you carry it over the weekends, it's the same thing. And when I do swing trading, there is times where I have to carry them over the weekend. But if you're right in the trade, it don't matter about that little bit that they charge you. And like I said, it's not much. It's not even worth trying to figure out trading that stuff at all. Because if you see the move, you move. I mean, like this, I would get charged if I was in the pound New Zealand, if I was long. If I'd bought this, I bought the pound, I was selling New Zealand. Now that New Zealand has a higher interest rate than the pound, if I carry it overnight, which I would have had to do, then I'm going to get charged a little bit for that. But because I wound up being right, it overcomes that little measly little interest that they take away. And if this thing continued, hold on for a second. I got somebody at the door.
Three covers on it. I'm turning it up. I'm blowing my covers off.
And they can't see almost like hot, and that's how they
And I
hot.
just get up and drink a ton of water.
Yep. That's how my mom is.
And that's where she's up and down peeing on me.
Yep. Missouri. Yep.
So I had to call and say, I can't take that. He goes, those are the two strongest it is. I mean, you're going lower, not higher. Those are the two highest.
Well,
So I said, well, he said, just don't have to deal with the pain. So I'll deal with it because I don't want to have this and then still have the side
still have the pain, and then not be able to rest and get rid of your pain because you're up and down peeing.
So I got the gas and stuff, and I was told him to I got to do it, and I got another refill. So what do you that's she needs some more, I got more. But those are last one, one of good, so let's say
Well, I was going to say, at least she's been taking a leave, but it's not touching the shut that this one.
that's good. That does pay to do it.
They get a little Tylenol usually if I can get it before it gets too bad, but other than that, yeah.
I've got one.
Yes.
Now the only problem is that if you do not drink a lot of water with it, it's going to tear up your stomach.
And it sits right in here.
Oh,
you
yeah.
taste it.
Yeah,
You get the capsule.
that's why you got to drink water to get it to go down.
That is one of the
This is pretty good stuff, though.
It is. Does Josh still take it? Because Josh and I were talking about it. Like, he was thinking too much.
I know he used to. I don't know if he's still, but now with his back kind of flaring up, he needs to get back.
Right. Yeah, because he said it helped a lot when he was taking it. Because him and Patty were talking
But I
about it.
always, and he's not a big water drinker.
No.
I said, you're going to have to drink water. You're going to be running the bathroom all the time if you don't.
And you know, you have to eat.
No.
Hi, baby girl. You're so pretty. You guys are so pretty. Yeah. You're so gorgeous. Oh, are you a chunky girl? Oh, I got a baby smile. Oh, that's good, Dad. Right. All right, go hang out with Daddy so you don't run out the fence. Because you run out the fence every day anytime like this.
Okay, I'm back. Sorry about that. I had a neighbor come over that's having some pain issues, and I happen to have some hydrocodone. That should help her out. So where was he? Never trade. Oh yeah, we went over that. Yeah, you're right about New Zealand. Now, when it trends, it's good to trade the New Zealand. But I'd rather trade the New Zealand yen than the New Zealand dollar. Because it just goes sideways way too much. I think, let me take a look at this one. New Zealand yen, yeah, it's not really moving. Now that's put up. Let me give you some more examples. Let me see this one. I don't think I've looked at the Euro Aussie 4 hour. See, here's another example. This is a 4 hour on the Euro Aussie. Oh, by the way, I don't know if I had told you, I don't trade 1 minute, 3 minute, 5 minute, 15 minute, 30 minute. I don't trade any of those. I trade 1 hour and 4 hour, and that's only because I know for a fact that the analysts, that's what they use. And the big boys that trade. That's the ones that's in the 5%. So if the ones that, like I said earlier, 95% of traders trade lose money. 68% of those, 95%, blow their accounts. Now it's not overnight, it always takes time, but for some it's faster. And that's where the greed comes in. So what would you rather be in, the 95% or the 5%? So if the 5% are trading 1 hour and 4 hour, why would you trade a 1 minute, 3 minute, 5 minute, 15 minute, 30 minute, 45 minute even? I follow them. Because this is what happened. I mean, sometimes they're going to run away, the trades are. They just are. Like for instance here, you wasn't able to get in when that showed up. You couldn't get in. The risk to reward was too great, and it runs up. But look what happens. It comes right back to it. There's your opportunity to get in. If you did get it in there, your risk on that was nothing, probably $10. And then you were able to take off half your position. You hadn't been able to do the rest yet. But you probably were being stop out, because if you did get in there, your stop should have been there, and you wound up getting stopped out. And it looks like, because there's too many poke downs, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's too many. It shouldn't happen like that. But you were fortunate enough to get the trade. Couldn't get in that one, but you did get in that one. You got half of your position. Now your second half probably didn't make any money. It just broke even. But you got on the Euro Aussie, I take off anywhere from 50 to 60 because of the range on it, which is about 100 to 110 a day. So 50 to 60 is my number on that. You would have got that if you got in there. You would have got that in there. So that trade, you would have got your $60, and the second half would have broke even. But everybody else in here trying to look money, I'm not chasing. So you just have to wait. If you missed that trade when it first showed up, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 hours you had to wait. No, actually that's 10 4-hour candles, so that's 40 hours. So that's almost 2 days you had to wait for that retracement. So you just have to keep coming back and looking at them to see when they run away like that. Wait for the pullback. Euro yen, same thing. You probably didn't get in that candle. You might have. But when that arrow shows up, it's running away. Nothing you can do about it now. You just pull. Got to wait for the pullback, and that might not happen today or tonight or even tomorrow. But you just have to come back and look at it. Nothing you can do about that trade if you missed it. You start looking at others. I'm in the New Zealand yen short. I didn't get as good. What did I get? New Zealand yen. Half a position for training purposes again, because I'm at a $8.50 if I lose, it's $8.50. So a Big Mac. I lose a Big Mac if I lose on the trade. It's not where I wanted to get in at, because it was later when I come on. Just for training purposes, I went ahead and got in. It was a little bit more where I wanted to get in at. So my loss would have been smaller. Plus, it's a half a position. So, yeah, it's only gone 15, 16 in my favor, so not enough to take off. And here, because this has been the daily range from Europe into here, so it's not really gone anywhere yet. So it could continue pushing up, but that's where my stop is right now. So if I'm wrong, I lose $8, which I don't think is going to kill anybody. Let's continue. Euro New Zealand. It's going up a little bit more, not much. But the market in New York has just opened up. So, yeah, I wish I was able to get that pound Aussie, the first poke down there. Now that's Euro New Zealand. Wish I could have got the better price, but I wasn't in the room when that happened. So I'd got up in there, and see, pound Aussie, that would have been your opportunity. This on the 4-hour, half a position's already been taken off, and now you're moving your stops up, which it should be right there now. If you got in there, now your stop's right there, and your other part of your position now is made money. So you don't have to look for another trade. There's people that add to their positions on there, but I've noticed, and they're on YouTube. They're willing to add to their position. Now I am to a point whenever depending on what the daily range was, and it's come down to the daily range. Let's say, for instance, we didn't know none of this was going to happen, and the arrow happened to be right here, for example, and then the daily range happened, and I said, okay, that's it for the day. I think it's going to turn around. I don't see the I don't see the rest of this. That's what I'm looking at, even though it ran up some. But it has to depend on where and when the daily range took place and how much time is left in the day. Which for me, New York session ends at 4 o'clock Eastern time here in the U.S. So let's see, the Euro CAD. 4-hour is what this is, made a buy signal. Now it's not really come down to where we need it, and it's trying to run away. So now was there an opportunity in the Euro CAD to get long? Now with those 3 hours, see, that was back about midnight last night, so no opportunity to get in there. So I'm switching to the 1 hour. Here it is. Yeah, again, no opportunity. See, there's the arrow. Didn't really have opportunity. I mean, you can, and of course it's running away now. So I can't trade that. I have to wait for the pullback somewhere down into here for a buy. So can't look at that one. CAD yen is in a sell, and see, there's your 1 hour, there's your sell, there's the poke up, there's where you get in, low risk trade, and now it's moved in your favor. Not a whole lot. CAD yen's another. It's got anywhere from 60 to 70, sometimes 75, and 80 even. I've seen 80s. So you have to take quicker profit. Yeah, that you're talking about, that yellow line right there, correct? That's a demarker pivot. Now you can get those on it. Like I said earlier, I looked at the one on TradingView, and it wasn't the same location as the one I have on MT4. Oh, the yellow line on the previous start. What was I on? Let's see. Euro CAD. Is that which one it was? Oh, hold on a second. I think it's what it was while I was pulling it up. Gotta let the dog in. Okay, had to let the dog in. She barks a different bark when she wants in. I don't know if it... Are you talking about this yellow line right there on this chart? Is that the one you're talking about? Yes, that will act as resistance. See how it did right there, because it was in a downtrend, so that was a resistance. Now it doesn't always do that. If it goes above that, then chances are, and closes above it, then chances are that it's going further. Let me scroll back, because I think EuroCAD's been in a downtrend for a while. Let's see, there's one where it just hit it, didn't close above it. Now yours may not be in exactly the same if you're using Trading View. May not be in exactly in the same area, so I noticed that before. That one's a pretty good distance from, see, EuroCAD's been in a downtrend for a while. See, when you get two closes above it, see there was one, the yellow line, then the chances are it's going higher, but it only did one, and the next one closed below it, and that was continued down. So they can act as resistance, but sometimes it'll blow through it depending on if the trend change is happening. But EuroCAD's been in a downtrend for a good while, several weeks. Use quarter pivot on Trading View. I'm not sure what that is. Quarter pivot. I think Trading View actually has DeMark pivots, because I pulled them up before, but they weren't exactly in the same place as what the MT4 is, which I've just adjusted the settings on these too, the DeMark on the MT4. Yeah, EuroCAD's been in a downtrend for a good while. Yeah, as the market's open now, I've been trading for about 12 minutes. I'm not sure what quarter pivot, what that is on Trading View. Is it similar to the DeMark? That was the EuroCAD. What's my Euro New Zealand is not going anywhere. So I'm gonna put that. I hope my charts hadn't frozen, but they sure look like it. There we go. Yeah, EuroCAD's still trying to push up. Yeah, if it's going up, it's gonna struggle at that yellow line right there. Oh, it's like monthly, quarterly, and yearly. Yeah, I got these because I do swing trading. Longer term you can use once you get in a trade if you want to stay in it for long term. But when that happens, there's huge retracements. And it could still do the trend. The chances are it's probably going to stop you out. Because if they made a big move like that, you know, down, that's several hundred pips before it makes a turn up. More than likely it's probably stopped you out. That's the only bad part about using those. Mine is based on 1 hour, and of course when it does the 4 hour it changes, and that's the only time I use those. Sometimes daily I use it, but I found on the 1 hour and 4 they look good. See how they hit the resistance on the 1 hour and come down, and the 4 hour they do the same thing. But I look for two closes. If there's two closes above that yellow line, chances are it's going higher. It doesn't do it all the time, but the greater time it does. Does that mean that now there's a trend change and it's going higher? But see, it just went up to it and touched it, didn't come close to closing above it, and continued down. let's see. Need to see what the Euro New Zealand looks like. This kind of feels like it's going sideways. It's and that's a 1 hour chart. Excuse me. Yeah, New Zealand yen is not really moving anywhere either. But I'm okay with that. I mean, I'm not going to get a lot on it because it don't move a whole lot. But I just done it for just training, example purposes anyway. Like I said, I'm just going to lose $8 on the New Zealand and 17.5 on the Euro New Zealand and 8 on the New Zealand yen. So if both of those trades fail, I'll lose $25, which that I can survive that. I don't. You can look at the video earlier. Are you long or short the USD JPY? I hope you're short. As I talked earlier, and of course all of that's will be on the video if you want to go back and look at it at the end of the day. I would try to get out of that long. That's probably going to go to 150 because the Japanese have said they're going to step in and drive it down. And once that happens, you can go back on a longer term chart and look and see when they've done this. It could be driven down anywhere from 400 to 700 pips. And even if you have a stop in, it's not going to get hit. It's going to blow right through it, so you're going to get a terrible feel. Yeah, I'm not even sure I'd have 151 as a target because they've talked about 150 as the number, and I think they're waiting on a close above 150. And once that happens, because it's gone up to 149.71. And then they've tried to drive it back down a little bit, but not much. But that's not them, because I mean it's only gone down 40 something pips. But when they get that close over 150, they're going to step in. So I'd rather be short. I'm short on my other account. I got an Interactive Brokers account, which I use it for like diagnosing stuff mostly, because they're a lot better. I mean, they got a lot more stuff to use than a Wanda as far as back testing. But I'm actually short. I'm short from 148.86 and I'm short from 149.57, which I got in this morning. So I'm willing to add to those. See, this is one time I will add because I know what's going to happen. So I know it's not going to go too much higher than what it is. So I've done half a position on all of those. So if it gets above 150, I'll add to that too, because I'm expecting it to be driven down. And once it is driven down, then that's when the opportunities for longs are going to come in. Once they step in, drive it down. Probably have to wait for a day or two, or maybe even a couple of days to step in long. Wait for a long opportunity. Yeah, it's if you look at the chart, it's been uptrend for a couple of years. So and this stuff doesn't go up forever. And plus, it affects that the higher this goes, it affects Japanese imports and exports. And so they can't have it above a certain price. And if you go back and look, you'll be able to see on charts because there would be big old humongous candles. I mean huge. When they step in. Because it's the Japanese banks that do it. So I'd be more wanting to have my target in the 150s than the 151. But that's just me. You're welcome to keep it there. But just remember, if you have a stop, it's going to get blown through it. So you're going to get a terrible, terrible slip. Because that happens all the time when they do this. Like 9/11. I don't know if you was here when I was talking about that. When people that were trading that, they had stops in, and there has to be somebody on the other side of the trade for you to be able to get out. If there's nobody willing to buy or sell, you're stuck until there's somebody that shows up. And it could be much less down. That's what happened on 9/11 too. And in 2008, same thing happened. People's stops, they had them in, they got blown through, they got a terrible, terrible feel and lost a lot more money than what they should have. So just be careful, very, very careful on that. Yep, hard stops do give you more. You're correct. Because that's what I use. Immediately when I put my trade in, I put the stop in. Because it's going to hit it regardless. But to have one where you just want to say, when it gets to this number, I'm going to get out. But when it gets to that number, it may have gone down a little bit more. Plus the spread on it. So now you've actually lost more money than what you had if you actually put a stop in. So that's why I do it, and that's just from experience too. I've done this for, my trading started learning in 97. I didn't actually start trading until 98, October of 98. Like I said, you're going to learn a lot more by printing your charts every day, and then that way you can look at them when you write them up. Why you got in it, where your stop was. And where your first profit target was going to be at. And then you can go back and look at those all the time. No, because it's pretty simple. My back testing has been more on printing my charts off. That's the best back testing there is. Because you can go back and look at these. It's the reasoning why you got in a trade. Because you're writing that on that piece of paper. When you print the charts off at the end of the day, if you got in a trade, if you happen to get in it. But because that's the best teacher to me. It's because you've already written, and you can go back a year later and say, okay, now why did I get in that trade? And you've wrote down why you got in that trade, and you can go back and look at it, and you'll learn over time by seeing the same thing over and over and over. And you start learning, okay, now I need to adjust this, or I need to adjust that. And backtesting really doesn't do that. But I found that writing it down, printing your charts, it does cost money. But if you're doing this full time, or not even full time, you can be working and still trade swing trading. Because I tell everybody that, because they ask, well, you're at home all the time. And I go, no. And swing trade, if you were doing 1 minute and 5 minute charts, I would say, yes, you need to be in front of the computer all day long. I don't want to be in front of the computer all day long. That's why I do swing trading as soon as I get in a trade, because I have an alarm set on here when the bars go off. So all I got to do is come and look at it. And of course, if it's a 4-hour bar, then I got to wait. So I don't have to be in any kind of rush. It's a 1-hour bar. I still have to wait a little bit, but I just don't have to be in any kind of rush. Yep, swing trading, that's what I do. I'm hoping in the day that I put the trade in that the first half of the position is taken off. That takes all the pressure off. When you get your $60 or $40 or whatever, depending on what currency it is, and the range for the day, it makes you feel a little bit better. You don't have as much stress. That's what I find. Yep, 1 hour and 4 hour, those are the swing trading. Nothing lower than a 1 hour. Nothing. Because like I said earlier, the analysts and the big boys, the ones that are in the 5% that make all the money, that's all they use. 1 hour, 4 hour, and daily. They don't use anything less than that. So there's a reason they do that. So I want to be in that 5%. So I'm going to follow what they do. Because I've heard people say, well, I use the 1 hour and 4 hour, but I use 5 minutes to get in. That doesn't work. I've printed these charts off, and it shows it doesn't work. So I don't want to follow that, because the big boys don't follow that. And there's a reason why they don't follow that. So they're the ones that makes the money. That's the ones I want to follow. I don't want to follow these YouTubers. that's on there and trade 1, 3, 5, 15-minute charts. They just don't want to. They may make some money, but if you've looked on there long enough, I mean, if you look at their past videos and when they've last been on there, you'll see that they was on there for 4, 6, 8 months even, and all of a sudden they're gone. And the last video they had was a year ago, so that means that they lost money, or hopefully nothing else bad happened. Don't want that, but most of the time it's that they blew their accounts and what they were doing wasn't working. And there's a ton of them on YouTube, but they get a lot of followers. They do. A lot of people subscribe, a lot of people like to them, a lot of people follow them, but they want entertainment. I want to make money. I can get entertained after I get off. Oh yeah, I've heard of people do that. I had my friend of a friend of mine's. He was acquaintance to me. I didn't really know him, but a friend of mine knew him pretty good that traded Al Brooks, and he opened up with $2,500, which he really didn't have that to use, but he kind of convinced his wife that he could do it because he was using a demo trading on Al Brooks and was doing pretty good. Then when he got to live trading, he blew his account. And I've done that too. Back when I first started, I was doing 1 minute, 3 minute, but it gave me a headache trying to keep it, and I couldn't leave. I had to stay there all day long in front of the computer, and I was like, I don't want to do this. I don't want to stay in front of the computer all day long. I got other things I want to do. So swing trading has worked best for me since I started doing it, and it took a couple years because I started out buying stocks, but I couldn't buy much, especially now. There's no way. I mean, if I was just starting out buying $100 shares of Apple, $100 shares of Amazon, or $100 of Tesla, costs too much, too expensive, and then you still have to monitor it because of news from the company. Yep, the time frames, 1 and 4 hour work for me perfectly. Now they might not work for everybody else, but like I said, if you're still working a job and you're trying to learn how to trade, swing trading is the best way to go. Because like I said, if you do the same thing I do. Oh yeah, even the robots lose money. If you've seen those, I've seen those out there. The AI robots doing the trading, even those are losing money. Because the people who are creating them have to have a strategy. So they have to tell the robot what to do. So the strategy's not working. It's going to work some of the time, but you want it to work most of the time. And most of them take quick pips. Like I said earlier this morning, most people go 8 to 10 pips on average. That's what they get. And they're happy with that. But then they got to find another trade. Or if they're trying to stay in the trade, they've got their stop loss so tight. And say, for instance, you're trading the Euro New Zealand, and the range on that's 120 pips a day. If you've had to move your stop tight because you took 8 to 10 pips, and you're moving it, the rest of it to break even, you're gonna get hit. Because it can easily retrace 10 pips. It can easily retrace 40 pips. So, yep, that's why I don't trade this way. I do look for low risk trades. That's it, plain and simple. And I'm showing you examples of what I'm talking about. You get in, like I'm in the 2 trades I'm in now. I mean, the most I can lose is $17. Them robots don't do that. They lose a lot more. But you have to sit and look for these things. But they have to be programmed a certain way. And usually the strategy that they put in, that somebody has to come up with that strategy, and they have to tell the robot what to do for that strategy. So that means their strategy is not working. So then they have to create another one. And then they're able to, get a bunch of people come on there and subscribe, and they get, most people on there, I don't know if you noticed, most people on there spend more time getting people to subscribe and hit the like button and entertaining them than they do trading. And I don't know if you know this either. I said you can manipulate them Excel sheets, which they show to show, oh, I'm being transparent. I said this is, but you can change those and make them look any way you want to. And then there'll be ones on there, I'm sure you've seen that too, where they'll have, well, we won, we've made, say for instance, the month of September, we made 48 trades. We had 32 winners, and we had 14 losers and 2 break-evens. Well, how many pips did they make in those trades? As you see on mine, I had, like for instance, this has happened yesterday, and you can go back and look at my video from yesterday. Now it's long. I think it was an hour and a half almost to go through. But I had several trades. I was just doing it for trading purposes. Again, some of them were half position. But this will give you an example. I had a trade that was on Euro CAD. It was half of a position. I lost $8. I had another Euro CAD position, and it was a full position, and I lost $11. And you can tell from the video where I went in, exactly where I went in, because I say I'm going in now, and I put in the trade. So I'm going in then. And then you're able to see what the risk is from where the low was, where the arrow was, and where I got in at. And like I said, it don't happen all the time. Sometimes it happens during, like it did Europe last night, and it's just blown away. I can't do anything about it. I can't trade. So that's another one. Another one I had was a CAD yen short, which was a half a position, and I lost $4.50 on that. That was my risk. And I was actually up, I think, 12 or 14 on it at one time. But it didn't hit the 40 number I needed to get to. And then I had a Euro Yen full position, which I lost $10. That was my risk on that. So between those 4 trades that were all losers, it was $33.50. I had one other trade that was Euro New Zealand that was a long, and it was a half a position, and it went 60 pips in my favor. I got in at 177.08 and got out at 177.68. That was my target. It hit it yesterday because it actually went to 81. It actually went 13 more. But it at least took my position out because I had to get out of that position because it was a half. So I had to take the whole thing. So that was a $30 profit. So that one trade, just that one trade, nearly offset the other 4 losses that I had. I said that's the key, is to keeping your risk minimal. I said most people when they get into here, for example, this trade, they come in here right now and they say, oh my gosh, the Euro New Zealand is turned around, it's run up. They have all this, don't have this information down here. They just got candles or maybe whatever indicators they want to put on. And they say, I need to get in, it's moving up, it's going higher. And so they get in here, like right now. Look at the risk that you have to have that's involved here. And just the one trade, the risk that's involved. Now, it may continue going higher. But if this thing sells off, say you want it down here, it does this all the time. Once you print these off every single day when your session ends, I'm not sure where you live at, but when your day session ends, print the chart off, and you're going to be able to go back and look at these, and it's going to show you where you could have got in at very low risk. You don't want to end up here because it's almost reached its daily range for the day, so there's no more range. So now you got to wait till tomorrow for it to make a new range, and it may sell off to get more buyers in before it goes higher, but then it stops you out because it's dropped 80 or 90 point. Yeah, U.S. session is right now. For the Forex, it actually starts at 8 o'clock Eastern time, and it goes until 4 Eastern time, 4 p.m. Eastern time in the U.S. Now for the stock market, it's 9:30 Eastern time, and then it closes at 4 o'clock Eastern time. because the Asia session starts at 5 o'clock. Then your New Zealand session starts at 6 o'clock, and that's Eastern time. So that's going to be different your time if you're out of the U.S. So you may have some candles if you're out of the U.S. Your candles may look a little bit different than mine, but not by much. Not by much. Yeah, there's hardly any moves during the Asia session. The range on it is like 30 to 40 pips at the most. And that's not enough to make it. Now, there can be trades that start during the Asia session. I think I found one. Where was it at? Was it the Aussie? No, that's not. Well, that's kind of the Asian session, but not really. Let's see. This candle started at 15. No, actually, that's still New York. See, that arrow showed up at 4 o'clock Eastern time, U.S. And, of course, Asia started an hour later at 5 o'clock Eastern time. And so during their session, it actually made a pretty good move up. But that also went into the Asia session. So there is times when it will happen, but not very often. A lot of the trades start during a little bit before Europe session, and during Europe session there'll be a move, and you just hope that there's a pullback. If you're looking to get long like this, I would have liked to have seen a pullback down into here. Now this still wasn't a great risk. I think it was like $18 or $19 from that low to that low. So if you did get in there, then you've made half your money already, and you're moving your stops up probably right in here. So now the second half of your position makes money no matter what happens. It makes money, and if it continues pushing higher, you continue pushing the stop up some, but don't move it up too much. Like, see, if you was in it and you moved it up to there right now, that chances are that could retrace that before it goes higher really easy, and you're going to get stopped out, and then it'll keep going up and you missed it. Now you got to find another place to get in. So you kind of have to give it a little space, but as that trade gets in and you move your stop initially from there to break even to right there, now that second half is making money. And even if it gets stopped out, you made money. You made money on the first half, you made money on the second half. Look for the next trade. You don't have to look for another opportunity to get in, unless it starts selling off and it comes all the way back down here again, and then you got another low risk trade and you hope it goes higher. Now it could take that out, because the Aussie dollar has been in a huge downtrend. So let's see what's going down. Don't see the USD JPY is dropping off now, but this is not the Japanese stepping in. It's not. It's just a regular sell-off. So that's what it was alerting me, but I'm not in. I'm in that. No, it did take profit. Okay, on my interactive brokers, it took profit. It went 40 pips from where I got in. So now my second half of my trades in profit. So now I don't have to worry about doing anything else on it. So, but this trade is not for everybody. Like if they work a full-time job and they don't want to do swing trading, they want to do 1, 3, 5 minute or 15-minute charts, then they're not going to be able to do it, because you got to be in front of the computer all day. And Asia session is, you definitely don't want to trade that, because there's just no movement. So they wouldn't be able to trade and work. Only way they're going to be able to work and trade is swing trading, where it's longer term. Now, the longest I've ever been in a trade, the second half of my position was almost 2 weeks, because it started trending and moving up. But this is not the sell-off. I don't know where your stop is, or where you'd put your stop. But this is not the Japanese stepping in. This is just a regular retracement sell-off. Because they're not going to do anything until it closes above 150. And we haven't even got to 150 yet. So this is just probably an opportunity for people who want to get long to buy at a better price. What is this? I don't know why this keeps coming up. Euro New Zealand. Yeah, it didn't go in there. I think I'm gonna move my stop to break even. Yep, that's what I'm gonna do on that. Because just because I didn't get the price that I wanted, I just done it for so that Euro New Zealand's not gonna lose any money. It's not at my stop yet, but and the New Zealand yen is at my stop. Yeah, that's pretty good. 148.33. Let's see where the next resistance thing is. It's already broke that. I'm going to go to 4-hour chart. And see. What that looks like. So you're down there a little ways, 148.33. Yep, that's a long stop. See, I don't have any stops that big. I'm not sure where you got in at exactly, but this is just a regular retracement. That's all it is. This is not the Japanese stepping in, because you're going to have it's going to be a monster candle. It's going to be a monster. There's going to be a couple of them, monster candles. These are just regular retracements. So if it got down there, say, in the 148s, you might look to go long again, add to the position, and have your stop at the same place. Now you got a lower risk stop. And the pound Aussie, that was another one. I wish I could have been up to get in this trade, because it was at 9 o'clock at night, and I don't know. I usually check it before I go to bed. 148.67. So you did have a low risk trade. Your stop was 33. Was it originally 148.33, or have you moved it up to 148.33? As if it was at 148.33 when you got in, you were risking $34, which is a little bit past where mine's 30. That's the most I want to go, but 34 is pretty close, because actually 34 is the one I got in today, but I just did half a position. But that was just for kind of training purposes, to be able to show people, because otherwise I wouldn't have taken it. But yeah, that's how you do money management, is your stop has to be small. And then if you're right, then you're going to make, good money. And you can have, like yesterday, I had 5 trades. I had one winner. Now see, if I posted that, and I'd done like what a lot of these YouTubers, which I'm sure you've seen, they'll have how many trades they've made for the month or the week or the day or whatever. And they'll have that average, and everybody looks at, oh yeah, well, they had 48 trades, they had 30 winners and only 14 losers. Yeah, they're doing good. Well, you don't know how many pips they got, and how big their stop loss was when they entered. And so if they got 8 or 10 pips, that's not a good average. Like my average is a lot better than their average, and they had more winners. I had 4 losers in 5 trades yesterday, 4 losers, 1 winner, and I basically broke even for the day. Now, if I posted that, most YouTube people would go in there, well, he's a loser, because he had 5 trades yesterday. His record is 1 win, 4 losses, but the pip count I broke even on those trades. Now, wouldn't somebody want to trade that? Because on the reverse side, they would have to think, now, if he has winners, he's still got more losers, but he has winners, then they're going to completely offset his losses, and he's going to wind up making money. But most people on YouTube don't look at it. They want to look at how many wins did you have. I don't want to look at how many wins you had. I want to look at how many trades you had and how many pips that you made. That's it. I don't want to look at the other stuff, because that doesn't tell me what I need to know. Because if they have let's say for instance they take 8 or 10 pips even. Yeah, most of mine is, well, you can see like today, the trades I took today, just the two. The New Zealand yen was a 8.5 pip. That's my stop. So that's how much I can lose. And my target profit, is 40 pips on that. So that would be almost 5 to 1. The New Zealand yen on it would be 60 pips on the range, the first profit target for today. My stop loss is $17. So that would be almost 4 to 1. So that's my range, depending on what I'm trading and what the daily ranges are. Because like I said, they're not all 60, they're not all 40. New Zealand yen, because of its range, is 40. The CAD yen is 40. The Aussie dollar is 40. New Zealand yen is 40. Of course, the euro, the Japanese yen, the pound CAD, the pound odd, the Aussie yen, Euro New Zealand, Pound New Zealand, Euro Yen, Euro Odd, Euro CAD. All of those are going to be 50 and 60 profit targets because their ranges are bigger. So my risk to reward ratio is going to be anywhere from 2 to 5. And I think that's what you want. Very low. The lower risk, the better. The lowest I've ever got was the risk was $3. New Zealand yen trade. Yes, I can. We'll do the 1 hour. Yep, there it is. So it's got a sell signal, but it's just not really gone anywhere. It's not gone enough for the pips. It has to go by the 40 pips when I talk about this. It's got to be where you got in at, not where the high or the low was from the signal. It's got to be from the high or the low. So that's the 40 pip range. And from where I got in, it hasn't gone the 40. The most I've got was 18 pips. So it wasn't enough. And there'll be people say, well, why do you need to take it off at 18? It goes against my trading because I've done this for 16 years at this same numbers that it works. There's no reason to change it. You know the old saying, if it's not broke, don't fix it. I'm not going to fix it. I'm not going to have other YouTubers who don't win and who don't trade well for a living tell me something to do, different. I know this works. And you're going to figure it out too when you print these charts off every single day at the end of your session, wherever that is. You're going to start seeing it's going to start showing itself the same pattern over and over and over, and it has showed it for me for 16 years. So there's no reason for me to change that because my risk is low, my reward is great. So yes, it does take longer. I mean, it could be tomorrow before I can take profit, or even later tonight. But I got the profit target set, so I don't know when that's going to happen. I got the stop loss set, and I don't know when that's going to happen. So I don't have to look for another trade on those. Yeah, the New Zealand yen is a sell trading, and it's kind of been in an uptrend. And it, same thing. But when they show up and they're low risk, and I see, if I hadn't had to get into here. But I wouldn't have got in because it was past my parameters. But I had to do it, and I only done a half a side. So I said, like I said, I'm risking $8.50. That's the most I can lose, is $8.50. So I'm willing to take the trade for that. Now, like I said, I was up 18. That was the most I was up. But it's not enough to take it off.
So this may go higher, but it could come up into here, and you wind up having like a $3 or $4 risk for a sale. Because if it takes that high out, that's where my stop, the stop should be. But when it takes that out, it's going higher. Oh, you see what I was talking about, Muhammad? To see the yellow line there. You didn't have a close. You got up to it, up to it, up to it, up to it, up to it again. Close, close. So there's a good chance this could go higher, because there is the retrace. Just because it closes below it don't mean it's going lower. It takes 2. It didn't do 2. It done 1. So because my stop is already pretty tight, and I'm just losing, $8 is the most I can, $8.50 is the most I can lose. I'm willing to live with that. First, this is a half a position, so my whole profit target would be on New Zealand yen is 40 pips from where I got in, and it didn't get to that number, not yet. So hopefully this is going to turn around and continue selling off, but it might not. But I'm willing to take that risk for $8. I mean, for the price of a Big Mac, I can do without a Big Mac for a day. I'm sure most people could. I don't know if you watch a lot of these YouTubers. Some of these guys have, if they have a bad losing day, it's anywhere from $400 to $700, $800 a day. I don't know about you, but I'd be out of business pretty quick. Be blowing an account. But it, 4.5. What am I in for today? Well, see, yesterday I had a $4.50 risk, and the best I've ever had was a $3 risk. So you don't get those all the time, but that's where I found 30 is the best. It's got to be less than 30. If it's more than that, then the risk becomes too great. Because once you get in the 30s or even up at 40, and say for instance the New Zealand yen, if my risk was $40 and my first profit target is $40, I'm not going to make any money. Yeah, because it's going to turn around. It don't always go up. See how on the 1 hour back over here, on where'd my little cursor thing go? Right in there, how you made a retracement down. See, it's not always going to go up. See, this is where you can make money. So you had a low risk. There was your opportunity. If there wasn't an arrow there wasn't. But if there was an arrow there, and you got in on the retracement, you missed that down move, which you probably did, but you got in on the retracement, there's where you made your money. So it doesn't always go up, and you look for the low risk. See, that's a low risk trade, the high of that candle and the high of that candle, because that's your stop. If you get in there, that's your stop, and then there's where you made your money. Now you got a low risk trade, and it worked. They don't always work. Because anybody tells you that they make even 90% trades are effective, they're lying. That don't happen. Even 80% don't happen. But it's how you do the trades. If you got a low risk trade and your risk is say $10, even though that one wouldn't be $10. If your risk was $10 and your first profit target is 40, you're going to make money all the time, because it's going to take so many trades for you to lose. Let's say you lost this trade. It didn't work. It actually went up and you got stopped out. Let's say you've done 10 of those at $10. That's $100 loss. Now you've lost 10 trades, but you have a trade that works. The first profit target gets hit. You get $40. But the trend continues down. And then you move your stop up, and you get another $40 or $60. Now that one trade, just that one, has wiped out 10 losers. Yeah, well, I mean, you can see I'm showing an example where that's not true. See, that's the trend. The trend was up. You should have been taking a buy. But what happened? You had a big sell-off. So that's not always true. And it's going to show you, you won't even have to have me to tell you. If you print these charts off I can't drive this home enough. If you print these charts off every single day, every day at the end of your session, and if you got in a trade right while you got in the trade, right where your profit target was, and right where your stop loss was, you're going to learn so fast by just doing that you won't have to have anybody else tell you what to do, because you're already going to have the proof is in the pudding by your charts printed off of what to do. Now, most of the time, yes, it is true. But see, a lot of people, there has to be a sell-off like this for other people who want to buy. The big boys are not buying. They're not buying up here. Big boys aren't buying. The average trader, which is me and you, this is where we want to buy, because we go, oh, it's going up, it's going up, it's going up. I got to get in. It's going higher. Well, look what happened. You get in and boom, you got stopped out. That's a big lot. That's a lot to have to hang on to. Right there. And it's over a day too that you're having to hang on to that. So you're getting nervous. I don't get nervous with the way I trade, because I lose $8. Is that going to make me nervous? When I know that if this trade works out that I'm going to get 40 or more, but the most I can lose is $8, I'm not going to get nervous about that. That's why I would have took that trade if that candle had showed up here instead of here. I would have took that trade, and I'd have made money. And I'd have been against the overall trend, which is up on the New Zealand yen. Always remember, there has to be sell-offs. There has to be for the big boys to get in. They're not buying up here. They're waiting for this, and you see what happened. They waited, and they got rewarded. So just remember, there's always going to be a sell-off, and that's what you're waiting for, is a sell-off. Now the buys in here, let me see how long ago. I probably got to go to a 4-hour to see the buy. Because for some reason when I scroll, where is my little yellow? Oh, there it is. No wonder I changed it. Got to get it back to the little yellow dot. See, don't always listen to these. I know I'm on YouTube, but don't always listen to these YouTube gurus, so-called gurus on it. Don't always listen to it. Because even in the books where they've been written, even Warren Buffett says this same thing. The market doesn't always go up. The market doesn't always go down. That's the number one thing you want to remember. So there's going to be retracements at some point. You just don't know when. See, I know when. With my, this may be a loser, but I'm willing to take an $8 risk to be able to get a $40 reward. 5 to 1. I'm real willing to take that. I'll take that all day long, because I'm not at $8. I'm not going to go out. It'll take a long time with $8 losses for me to go out of business. A long time. And you know that I'm not going to lose every trade, that I'm going to win some. So my winners are going to offset a ton of my losers. That's why on the YouTube, when you go to channels, if you look at them, and they have that, we've done 50 trades in a month, and this is how many winners we got. That can be deceiving. And like I said, they may have an Excel sheet, which a lot of them do, where they'll show you this is where the trade I made, stuff like that. And even on like a demo account, they can hide that it's a demo and have an account number, because even a demo has an account number, and it'll have those numbers on there to show, and those can be manipulated as well, because it's a demo. So you see where mine are. I don't even have to show you my trade, because I'm telling you, this is where I get in. My arrow shows up. If it runs away, I don't get in. I just missed it. I hope for a retracement back down to where I can get in if it's a buy. And I hope for a retracement. See, this is where I would have liked to got in, was right up in here on the sell. Like I said, I took a half a position. It's only an $8 loss, and it's just for training anyway. So I'm willing to risk $8 to help somebody learn. It's worth $8 to me for somebody to learn. Me lose $8 for somebody to learn. Now $100 is a different story, but I'm not going to have a $100 risk. I'm not going to have a $50 risk. The most I'm ever going to have is 30. And that's not going to break anybody. But if you have a couple $100 risk and you have several of those without having winners, and if you don't take a good profit target when you do have a winner, if you still take, if you've had $100, $200 losses and you take a $10 winner, how long is it going to take for you to catch up at taking 10 pips? But there's a lot of people do, and the only reason they do it because they want to be in a chat room where somebody's trading, where they can talk about politics and all that crap all day long, and then hopefully be able to get in a lot of trades. And they're trading 1, 3, 5, 15-minute chart, or they're trading breakouts, and then it may or may not break out. But on breakouts, you got to have a pretty wide stop on those. Now these candles here, which I'm sure you're talking about, that candle is what I created. It is a mixture of price, time, momentum, RSI, and fib. It's a combination of every one of those, because every one of those are used in trading. So that's why the arrow doesn't always show up. You would say it didn't show up here. It didn't show up there. It didn't show up there. It didn't show up to here. It don't always show up because it's not got to the numbers. But see, if you got in here and it didn't show up, then you may or may not have made some money. Been close. You'd had to have the perfect high and low, and you see what happened. Same thing here. It went higher. So I want low risk trades. See, if I'd got in, I already been up. If I could have got in that trade, but I'm already in it, and not at the price I wanted. But for $8 for somebody to learn, it's worth it to me. So the USD NC has come back. See, it drove down a pretty good bit. What, 60? Almost 60 pips. So that's not the Japanese, not yet. Oh, you'll be able to notice that when that happens, believe me. When the Japanese step in, you're going to say, man, look at them. They're going to look like 9/11. If you've ever gone back and looked at the 9/11 candles when that happened here in the U.S., they're going to be similar to that. Not quite as big as those, but they'll be big. And that's because that's the yen, the Japanese stepping in. Because right now these are just regular retraces, these sell-offs. Because nothing's going to happen until it closes above 150. And that's a daily close, not an intraday close. That's a daily close. So it's probably going to close higher than 150. So it may or may not get to your 151 target. I'd just be careful. Even with a stop, I'd be really, really careful. If you can take some profit off, when it gets above 150, I would take some off. That's just me, though. That's what I would do, just knowing what's coming, because I know what's coming. Unfortunately, on 9/11, nobody knew what was coming, so that's why so many people are still working and they were close to retirement, because their 401ks were huge, because the market was oversold then, big time. And we're way oversold now, and I think something else is going to happen. Just don't know. Hope it's not another 9/11, but it's going to be some kind of really bad news here in the U.S. and it's going to tank. And it may happen sometime in October, because that's when we usually generally have big sell-offs, is in October. Usually the first week or 10 days. There's a really good sell-off. So today's the 28th, and who knows, the Japanese may wait till 1st October. Don't know. But I just know that's the number. Because if you go back in history and look, when it got to 150 before, years ago, they stepped in and then they really drove it down. And that's what's going to happen again. Yep. And it will. It's going to continue till it gets over 150. So if it gets over 150, I would just try to protect your profit. Try and protect it. Because that daily close over 150, at any point, they can step in. Because that's all they've talked about is that number. And it happened years ago at that same number. So there's something about it getting up to that number for them on importing and exporting. They can't let it go anymore. So I don't know a whole lot about all that stuff, import, export, and how all that stuff works, but apparently it has a lot to do with it. Yeah, it will. That's why I'm short, because it's going anything tied to the yen, like the CAD yen, the Aussie yen, the pound yen, anything tied to the yen, it's going to affect. Not just the US dollar one. It'll affect them all. So the New Zealand yen will drive that. That's why I'm a seller. That's why I'm a seller and not a buyer. Because if I wanted to buy, I want to buy down here. Where's my yellow? I don't get that. How did that go away? My little yellow dot where you could actually see it better. But it's definitely gone away. Oh, there it is. Yeah, if I was going to be a buyer, I want it buy down in here after a retracement. Yeah, I don't want to buy it up here. I mean, it could take that out. But knowing what I know about the yen are going to step in at some point, this thing's going to be driven down too. So I'd rather be in the sell and not the buy. Because at that point, instead of having to see, I'm not going to have, when I get in the real trade, when this pushes up above 90 on New Zealand yen, because the New Zealand yen should be about 90 when the USD gets above 150. I'm going to look to be a seller when it gets to be 89.50, 89.60. I'm going to look to sell. And I won't have a first profit target. Because when I wake up, it's going to happen when I'm sleeping here in the U.S., wherever you're at. It could be while you're trading. It could happen. But here in the U.S., I'm going to wake up and be able to, hopefully it's going to be $400 or $500 down. And as soon as I get up and I see that, that's when I'll take half off. Is right then. I'll take half off right then. And then I'll start moving my stops way down. But this is for like training purposes. That's all this is. Now see, the yen's not going to weaken. The yen weakens when it goes up. On the trade I want to get in, the yen will become stronger. And that's because I'm actually buying it. I'm selling the yen. I was selling the New Zealand and I'm buying the yen. And the yen will become stronger. See, as it's going up, the yen's becoming weak. New Zealand becomes strong when you're buying the New Zealand. You buy the New Zealand, sell the yen. The New Zealand becomes stronger. The yen becomes weaker. They can't have a weaker yen. That's why they're going to drive it down. They need it to be a little bit stronger. And so it'll become stronger whenever it sells off, because now the New Zealand becomes weak and the yen will become strong. So it's exactly the opposite of what you're thinking. And that's on all of them. That's on all of them like that. So they say the Euro yen, New Zealand yen, pound yen, Aussie yen, CAD yen. All of those, should be sale opportunities, because the CAD yen's overbought, the New Zealand yen's overbought, the USD GPY is overbought, the Euro yen's overbought, and the odd yen's overbought, and the JP, the British pound yen, is overbought. So if you're long on any of those, be careful. So that's why I'm a seller of the New Zealand yen. I'm a seller of the USD JPY. That's why I was selling yesterday the CAD yen. I don't want to be a buyer, not yet, because at any time when the yen steps in, and I don't know when, but it's getting very close. It's going to happen at any time, so I don't want to be long. So I'd rather be short when that happens. So I'm willing to take little bitty $5 and $8 risks getting in short, and if this goes against me and goes up and it presents another one of these sales, I'm going to take it. I'm going to take a sale, even though the trend says up. just because I know what's coming. I know what's coming. So I'm willing to take those, betting that I keep doing these little $5 and $8 losses, and then a week later the yen step in and boom, it's going to completely wipe out every single, and I'm going to make a ton of money on it. So that's why I say, please, protect the profit that you have since you're long in the dollar. Protect it for your safety, because I'd hate to see that happen to you. I hate to see it happen to anybody. When they step in, it's just going to crash. But then it'll become a buying opportunity, because now it's driven down to where somebody wants to buy. Now they want to buy it low. They don't want to buy it high. They want to buy it low. Just like in this New Zealand yen, that the big boys are not. Me and you, the average Joe, what they call the average Joe, are buying right here, because we see it's going up, it's going up, it's going up. The trend's up on it. Well, boom, this is what happens. And the big boys don't buy there. They buy right here. And that's where they made a ton of money. Buying here, selling up here. Now they may still be in it, because they're willing to stay in trades longer. They got more money, a lot more money than we do. So their stops, they may take some off, which I'm sure they do, and their stops may be down here. And they may think that it's going higher, continue going higher, because they know what's going on too with the yen. And so they may know that, hey, this is not going to sell off till it gets up to 90. And it's trading at 89. So they know it's going up to 90, so they're not going to take anything off till it starts approaching that. And when it sells off big time, they're already out of it. The average Joe, me and you, are still in it, and we're getting crushed. Because we were on the wrong side. They were on the right side. They got out because they knew what was coming. And then they're going to look to buy when it sells off 500, 600, 700 pips. Then they're going to look to be buying. And that's the only reason I'm selling. Otherwise, this is what I look for. I look for these. If an arrow showed up there, I'm a seller. It worked when it came up here. If I'm a buyer and it showed up here, even if it showed up there, you didn't get stopped out. There's your buy. Boom, buy. Made your money. Got stopped out. There's another buy opportunity. There's your buy. If the arrow showed up, there's your buy. Boom, you made your money. And they see this in an uptrend, but yet you made money on both sides. The sell and that's what's good about swing trading, because these are hourly. So that was a 2-day trade, and this has been another 2-day trade. But yet it's still in an uptrend both sides, because you can actually tell somebody, I made a sell and made a bunch of money selling the New Zealand yen. And they go, but it's in an uptrend. So you just have to know where these are showing up at and when to buy it. You don't want to buy here. You probably didn't get that one. And the risk would probably been too great to get that, so you missed it. But then you wait and you're rewarded. You wait and you're rewarded. That'd be your stop. You get in there, and there's where you make your money. There's the down move. And you're moving your stop as you go, which eventually, if you come down to here, you've probably moved your stop in here, and you got stopped out, and it turned around. See, when you get stopped out, there's always going to be a little retracement like that. Always. You get stopped out, a slight retracement, and then the move for the buy happens. So you just have to monitor that, because it doesn't always go up, it doesn't always go down. Now the trend will be longer term, because like I said, most of these, like the New Zealand yen, the pound yen, the Aussie yen, Euro yen, all of those are in longer term, 2-year uptrend. And so that's a long term, but in the meantime, you can still sell, you can still buy. You just don't want to buy low. You want to be able to buy low and sell it high. You don't want to do the opposite. You don't want to buy high and sell low, because then the risk is flip-flopped. It's too great, especially if you know the trend. That's why I would have took this trade if the arrow had showed up there. Even though this is in an uptrend, I go, okay, I know it's a retracement's coming. I don't know when, but there's my opportunity on a low risk trade. And that happens a lot, not just on this one. See the euro yen. See, there's nothing we can do about that. We weren't up. That was during Europe when that happened. Now, you may have been up during Europe. But for me, when I wake up, it's up in here. The risk is too great. But you would look and say, oh, it's going higher, it's going higher. Yeah, it is going a little bit higher in there. But if you buy in there, where's your stop? It has to be here. Because you know, just seeing from all this stuff I showed you, there's going to be a retracement. 90% of the time, it's going to retrace and come back into here and give you an opportunity to buy. But I don't really want to be a buyer knowing that if the yen step in, this is going to be a sell, a big sell, not a buy. So I have to take profits a little bit more quickly if I wanted to do that. Like if I did want to be a buy and I happen to get in there, I'm taking my position, moving my stop up a lot closer than what I would normally do, just in case the yen overnight want to be able to do something. But I'm looking for sales on these, not buys on these particular pairs. Now the Euro New Zealand's different, Pound New Zealand's different, Euro Odd is different, Pound CAD's different, Pound Odd different, Aussie dollar different, the Pound dollar's different. So you got several to choose from. Of course there is others, but I don't trade the Euro USD. It doesn't move enough. I don't trade the Euro Swiss. It doesn't move enough. I don't trade the Odd Swiss or the Odd CAD. They don't move enough. Now they have movements longer term, but short term you have to be in them for a long time to get money. And I found that it doesn't always go to the, like for Odd CAD, Odd Swiss, Euro Swiss. It doesn't go the 40. It kind of it's too choppy, but it gradually makes little up moves. But it's harder to get the 40 pips in those. And maybe I'd have to look at those, but I've got plenty to look at. I don't need to add to what I got. You're more than welcome anytime. Hopefully I'm going to be here every day. Like I said, tomorrow, it being Friday, I usually don't trade. I don't know if he was in here for me to give the reason. Just from past history, I've learned from experience Fridays are the worst trading days for me. So I had way too many losing trades, but I do come on to monitor trades that I'm in or potential trade setups. And as you can see, the Euro Yen's pushing up, but there was no way I could get in it. You could have got in on a retracement there maybe. But see, it's up at the retracement right there. See, you were at the high, and this may close up here. It's got 12 minutes. But you're welcome, and thanks for subscribing, and hopefully we'll see you soon on another, because I'm going to continue live streaming. And let's see. I want to look at yep, still in that. New Zealand still in that. Euro CAD, I think, was one that ran up too. Yeah, it's kind of done the same thing. I'm gonna have to look at that. Yeah. Yeah, it's up there at the yellow. Up there at some resistance now. It may push higher, and we got to see if it's going to close above it. See, like that one just touched it. That one hasn't touched it. I would assume it's going to touch it, and it may go even higher. We got to see if it's going to close above it or if it's going to close at it or below it, and won't know that for a while. So let's see. Dun, 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 dun. We're having check my email today either. Text messages. I'm way behind on this stuff. Way behind on this stuff. No, 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 no. Oops. Oh. got to go out for a little bit. My wife just messaged that I got to take to the dog to the groom. Got a groomer appointment for the dog today, so that's my responsibility. Because she's at my sister's, so I got to do that. So I'm going to leave this running though, but I just won't be here to answer any questions you might have on the chat. But I'll leave this running. At least it's on the EuroCAD. You can kind of watch it. I won't be able to flip back and forth though on it, so there's not going to be a whole lot to watch yet. But I should be back. Oh gosh, I don't know how long it's going to take them actually to fix the groomers, because it's a little bit of a drive. I may just stay there and wait on her. It could be several hours, probably later and much later, probably closer to the New York City.